If stocks are crashing and you are not watching what gold and the dollar are doing right now, you are already behind. Here is exactly what is happening across Forex, gold, and crypto today and why it matters for your next trade. When equity markets sell off hard, big institutional money does not just sit on the sidelines, it moves. And it moves fast into what the market calls safe havens. That means two assets tend to absorb massive capital inflows: the US dollar and gold. Let us start with gold. XAUUSD has been catching aggressive bids as stock indices drop. This is classic risk off behavior. When portfolios are getting hammered in equities, fund managers rotate into gold because it has no counterparty risk. It has held value through every financial crisis in modern history. So when you see red across the S&P 500 or the Nasdaq, your first instinct should be to check gold. Now the dollar. This one confuses newer traders because they think a struggling US economy should mean a weak dollar. But in a global panic, the dollar actually strengthens. Why? Because the dollar is the world reserve currency. When fear spikes, international capital floods into US treasuries and dollar-denominated assets. That pushes the dollar index higher. And when the dollar index climbs, it puts pressure on pairs like Euro USD, GBP USD, and AUD USD. Those pairs tend to fall because the dollar side of the equation is getting stronger. So if you are trading Forex majors right now, you need to understand that the stock market crash is the primary driver. It is not about economic data releases today. It is about fear and capital flows. Now, what about crypto? Bitcoin likes to call itself digital gold, but during acute risk-off events, it often trades more like a tech stock. When the Nasdaq dumps, Bitcoin frequently dumps with it, at least in the short term. So be careful assuming crypto is a safe haven in the same way gold is. The correlation between Bitcoin and equities has been tight recently. That does not mean there is no opportunity. It means you need to trade the right direction. If risk off continues, shorting Bitcoin or at least staying cautious makes sense. If sentiment reverses and stocks bounce, crypto could snap back hard. The play today is straightforward. Watch the dollar index for overall direction. Use gold as your fear gauge, and let the stock market tell you whether risk is on or off before you commit to any Forex or crypto position. You can track all of these instruments in one place on Exness, which gives you access to gold, all the major Forex pairs, and crypto on a single platform. Subscribe so you catch tomorrow's live session before the market opens.